Today, I'm going to share with you how to make big profits, the key secret that no one teaches you on how to really trade like a pro. And there's two things. One is how to be consistent, and two, when to be patient. We are on day number 21 with BNB. Follow me, and we're going to go straight in to really looking at what's happening right now and what are we being patient for as a signal for a high probability setup. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. All right, so this is BNB. So what we're saying with BNB is we've been watching it nicely unfold into a nice 1, 2, what looks like a 3, ABC of a 4, and we anticipate this low is going to get exceeded. But we want to wait for another high probability setup. We make some good profits over here, and we made some good profits over here. But now we're being patient. What are we being patient for? Well, to be consistent, we need to know what we're being consistent for. What is a high probability setup? One of the key factors that you always want to do as a minimum is a double momentum setup, where the higher time frame and the lower time frame, the momentum is saying the same thing. So over here is what I'm referring to. There's thousands of momentum indicators. My favorite by far is the stochastics RSI. It's a simple blue line and a red line. And you can see the blue line and the red line are pointing up, right? Pointing up, but we're looking for short trade opportunities because we believe that low is going to get exceeded based on the pattern position. So what do we wait for? What do we wait for? What we wait for is to take a few more days to make a bearish reversal where the blue line goes below the red, just like it did over here and just like it did over here. Just that one thing is going to increase the odds of you winning. And then we look for a nice short setup, a nice short opportunity. So now let's jump into a lower degree time frame. So this is a daily chart. Now what we're going to do, we're going to jump into a 4-hour chart. I keep that in the bottom left-hand corner. Now with a 4-hour chart, I'm just going to zoom in a bit. I'm just going to focus on the price for a second. Let's get rid of this for a second as well. Now with the 4-hour chart, what we've had is a nice movement to the downside, and we've gone into some type of correction. Initially like an ABC was forming, but it's kind of just gone flat sideways. So what does this look like to you? Well, it's definitely some type of correction. So if I just draw this like so, if I just draw this like so, you can see it's squeezing together. So what should we be waiting for? Well, ideally a swing low. So I want two things before I'm even going to consider a trade on the daily and the 4-hour. The first is ideally the daily is bearish or at least oversold. So overbought in that top part of that sector. That just tells me that the upside is limited. And then I would love to see at least this low get exceeded. This will be a good signal that we're going to see lower lows. If the price goes below this point over here, this low over here, I will then wait for a correction, some type of pullback, ideally an ABC style pullback. These tend to unfold as the most common correction. It's the ABC zigzag. If we get something like this forming, then I will look for a high probability setup on the next lower degree time frame reversal. Go, what you get? Say that again. Come again. All right, so let's just go back into the daily chart for a second. That's the higher degree time frame. We're using that as the higher degree time frame. In the top right hand corner, I'm going to use this stochastics RSI. So I'm going to wait for either it's just to reach this overbought zone. So if I draw a nice big pink box, so it's nice and clear, this over here, or it actually makes a bearish reversal. The blue line goes below the red, similar to what we saw over here. One of those two conditions, right? So it's like a checklist. Has it done that minimum? We go, okay, fine. If it has, we go, great. Then we drop down to the lower degree time frame. In this case, it's the 4-hour chart. Then we want this low to get exceeded, this previous swing low. That gives us an indication that we should have seen some type of high confirmed, whether it's this or this. And then on the next bearish reversal, let's just use this one here on the bottom. I'm Just gonna get this up. Sorry, hold on. Yeah, this one. Either it's already bearish, like so, or it's gone bearish, bullish, and then on the next bearish reversal, now at this point, the higher degree time frame is either overbought, which is the daily chart, or pointing down, and the 4-hour momentum is pointing down. Now it's a higher probability that we're going to see further downside movement. And in conjunction with pattern, so ideally an ABC style correction, price, we'll do some Fibonacci retracements, and we'll also do some time analysis. And if 3 of the 4 factors of momentum, pattern, price, and time are all saying a similar thing, then we look for a very high probability setup to go low on a swing low or a 1-bar low and have a stop loss and a logical point to say what should the market not do if we're correct. We risk 2 or 3% depending on your trade plan. If we're right, we'll make a 3, 4, maybe 5 times multiple or break even or possibly take a small loss. But it's about doing that consistently time and time and time again over a year, over a 2-year period, over a 3-year period, over a 5-year period. And that, my friends, is how you win at the game of trading like a pro. If you want to learn anyway in Fibonacci, I've actually got a masterclass. It's in the link below. It shows you how to do the pattern counts, the 5-wave structures, and the 3-wave corrections, which are very common. They happen more often than not. They're quite typical in most markets and most cryptocurrencies on different degree time frames. And then I show you the key Fibonacci ratios where they typically fall under quite frequently. But again, we're looking at momentum, pattern, price, and then time. If you get all, or at least 2 or 3 out of 4, depending on your trade plan, with tight stop losses and everything else, you can make really, really good returns. But it's about consistency as opposed to being right. Most people focus on being right as opposed to making money. Most people focus on making money rather than consistency. Consistency is the name of the game. It's identify the trend, then ride the trend. The trend is your friend. Ride it until its end, until it reaches its bend, and do it consistently. And 3 out of 10, if you've got winners and profits, you're trading very good. Good to very good. 4 out of 10 is definitely very good. And 5 out of 10 wins on average is amongst the trading elite. Most people are trying to be right 8, 9 times out of 10. And if they're not, they're giving themselves a hard time. That is poor thinking. It's all about statistics. Being the casino is about having a small edge, make it as big as you can, momentum, pattern, price, and time, and then trade the edge consistently without hesitation and reservation. When the trade setup's there with your minimum criteria, you take the trade. You have no control over what the market's going to do. It's just a high probable setup, and then do that consistently. All right, let's finish on a quote. Let's go with chapter. I think we'll go 4 or 5. Let's have a look. We'll go with 5. We'll go 5. Quite 5. Yeah, here we go. Leonardo da Vinci. Simplicity is the ultimate sophistication. Now, there's millions, or maybe millions, tens of thousands at least, of trading tools and trading chart patterns. I like to keep life very simple. Momentum, 2 time frames. Right? I call it a double momentum strategy. Right? High degree, lower degree time frame. Check. Pattern. Is there a clear corrective pattern? Ideally an ABC correction before going short. Or if you're going long. Right? Check. Price. Has it reached 2 of the typical Fibonacci price zones? Ideally retracements, external retracements, and something called alternate price projections or price extensions. Right? We've got 3. And does it hit some Fibonacci time ratios? Typical corrections take a particular amount of time, and if it falls into that time bracket, then all of a sudden you got 3 to 4 things saying it's a very high probability setup. But we don't just buy or sell at those points. We need a logical thing. What should the market do if that trade is going to unfold? That's where we put our entry. And what should the market not do if we're correct? That's where our stop loss goes. Simple. So Leonardo da Vinci said nicely, simplicity is the ultimate sophistication. Less is more. So keep it simple. I'll see you tomorrow for day number 22. Follow me on BNB. We're just being patient. We're exercising patience. Consistency, patience. That's the name of the game. All right, I'll see you tomorrow for day number 22. See you then.